I have I set up my microphone this time using the controls before you opened up the chat or before you.
Gotcha.
So yeah, it worked. But I have a bucket truck out in front of my house. They're trimming the trees around power lines, and it's really noisy. So if you can hear it and it's distracting, let me know. I'll mute myself.
Okay. I don't hear anything right now, so
Okay.
we're doing all kinds of weird stuff today. I'm in a hotel. You got crews working,
Yeah. Yeah.
and we only got Keith so far. Keith, you can hear us good, right?
Hey, Keith. All right. Good. Good.
Sweet.
As long as Keith can hear us, I think we're all set.
Exactly.
We're good. We're good to go.
Here comes the rest of the classes rolling in.
Oh my gosh, these trucks are really noisy for me. I use a blue microphone, and I've got it on the setting so that you can only hear like directly in front of it. It doesn't
Sure.
pick up the side noise. So hopefully that'll work for you guys, but it's driving me nuts.
I don't hear a thing from my end, so it's good to go.
Oh, good, good, good.
Yeah, I love those blue microphones.
Yeah.
How we doing this morning, fine gentlemen? Mark, Mike, Keith. Might be a short class today. We'll see.
Everybody's enjoying the summer weather probably.
Could be. They're taking all their money and soaking up the sun.
Yeah, that's what I'm going to do as soon as we're done here. I'm going to go out on my deck and just lay it down for the day.
Yeah, it's 90 degrees over here. I'm in Connecticut. How do you read the bell curve on the downside of the curve, Keith says? Do you mean on the negative side or when we're going up or down the curve? Either one. So going up the bell curve, whether it's negative or positive, and you guys can see this, right? I think I got screens up that you shouldn't be able to see. But if there's anything you can't see, let me know. So yeah, looking at up the bell curve or down the bell curve, there's two different ways, obviously, of reading it. And we like trading up the bell curve better because that is typically a smoother ride. So like right now we're going, yeah, absolutely, Keith. The floor is yours, Keith.
Okay, here's what I'm confused about. When you go down the bell curve, negative or positive, when do you decide you're switching? Like say we're going down the bell curve right now, right up above here where we got 6, 5, it's highlighted, 6, 5, 4, 3, 1. When do you decide that you're switching from negative to positive going down the bell curve?
Where do you see 6, 5, 4, 3, 1?
Well, let's use the example that he's got right in front of us, Keith.
Okay, you know what I'm talking about though, Dave?
Yes, absolutely. Yep.
And the same thing with on the positive side as well. I mean, are they the same or is there differences?
It's the same. So if you're going down the bell curve, so for example, he has 4, there's 4, and then it goes down to a 2, right? That's going down the bell curve on the negative side. The fact that it never turned positive means that we're probably going to get a fat tail. You see how we went from 2 to 4? So we went back up the negative side of the bell curve.
Yeah, I don't know if I'm still. Am I still muted?
We can hear you.
No, I can hear you.
Okay. Yeah. But Dan said the reason why we went to a positive there is we had a quadruple peak and then broke below it.
Right. So we went from on the negative side. This is a very difficult concept. I understand.
Okay. Well, then look at this. Look right up above here where you got 5, 3, 3, and 1.
Right.
You know what I'm saying? We go from 5 to a 3. So am I now positive when I switch from a 5 to a 3?
Yes.
Yes.
Because yes, that's right.
Okay.
Yeah, because you're going down the negative side of the bell curve, so it's actually a positive bias.
And you see how these 4 days were positive, except for this was a negative 0.01. These were all positive results.
Okay, does the size of the bell curve matter? Now, let's say it was a 10 and then it went down to 7. Would that matter? The size, the size of it.
Yes.
Yeah. So we call that a hard landing. Typically, if it's more than 3 or 4, then it's going to be it kind of throws off all the numbers, and it's something that we typically don't trade. It does make a difference, yes.
Okay. I'm good. Thank you.
You're
All right,
welcome.
no problem, Keith. That's a good question. I mean, it's a tough one because if you're going down the negative side of the bell curve, it's like two negatives, right? You're going down and it's a negative bell curve. So I guess you could say that's a positive, and that's why that turned positive when we went from 5 to 3.
And we see it's typically never a smooth ride like 6, 5, 4, 3 here, and we got negative, positive, where it's a choppy ride. But if you're going up the bell curve, like we usually see, 1, 3, 8, it's all positive. 3, 1%. This was from the day before, so yeah. Look back at the spreadsheet, and you can compare that up the bell curve, 2, 4, 5, 7.
Yep, up the bell curve on the negative side. Yep.
Yeah, no chop. Purely negative. Then we start going down, positive, positive. Then we had the quadruple twos, so that goofed everything up. But yeah, that's why we always say up the bell curve is much better than down the bell curve. Here's a good example of the peak happening, and here's a smooth ride down, actually. So, like we say, everything's probabilities. This was nice, and a nice run of positive days, 12 to 8 to 6 to 3. See how they're less than 3 or 4. There's a 4 move, there's a 2 move, there's a 3 move, there's a 3 move. Then we went positive. It actually went to the positive 1, then a positive 2. So those were all positive numbers. You see how that was a nice smooth ride. That's probably the best thing you could ever hope for in a down the bell curve. That's normally what we see going up the bell curve, like we saw right before it. So that should all make sense, and I think you got what you needed there, Keith, but let us know if we confused you even more. It's usually a smoother transition. It's just a smoother trade going up. Up the bell curve is typically smoother.
Hey, one of the things maybe is I just was just thinking about this, is if you're going up a positive bell curve, then it's like two positives. If you're going down a negative bell curve, that's a negative.
It's two negatives.
Two negatives.
So
right?
two negatives equal a positive, right?
Oh yeah, that's right. No, that's right. That's true. And so if you're going down a negative bell curve, that would equal a positive. That's right. Absolutely. So I guess if you put those two together, so if you're going up a negative bell curve, that equals a negative.
Right. That's true, because it ends up it's a negative spread.
That's right. So it just means that the negative is more negative. I mean, so if we use an example, like we went from a -2 or a 2 to a -4, that is a -2. I don't want to confuse everybody. But anyway, yeah, so if you go down the negative bell curve, that's two negatives, that's a negative. Or
Just
up.
one more example of it's all math.
Yeah, it's all math. It really is. The market is math. It's just math. I talk about manipulation all the time, but the reason why there is a ton of, the more and more the numbers that I look at and the data that I look at is when the market's going up or down, it's so clear that there's tons of manipulation, especially in the futures market. A large player, because contracts are fairly thin, can really push around the market. And it's just so clear to me. But the reason that we do volatility arbitrage is try to eliminate that manipulation as much as possible and the effect on our trade. And then it does become math.
And you can see that when the big moves happen, like the last 2 days here, we've seen apparently the market must think like daylight savings time changed again, because an hour before the open, it's been extremely moving.
Yeah.
If we look at, let me get some of my screens out of the way here.
Morning in New York.
We had a big move at, where are we? Oh, I'm not showing overnights here. I had a lot of screens, even on my little laptop here. Let me just turn it on quick, and you guys probably saw it that we're watching. Let me turn on the overnight trading on the YMNQ here quick. Show extended orders. Get my chat out of the way for a second. Even I can't see some things. And then Q's over here. All right, futures overnight. This will be a good example of it because I did see it happen once again. As we look in a big move down on all 4 of the major indexes at an hour before the open this morning.
Yeah.
So that's what the regular. So here's the YM dropped. What are we, almost 975 down to 50 points it dropped overnight. That's a large move for overnight. So you compare that to the spread at 730, and yeah, it did move up a bunch, but it wasn't 50 points on the YM. So you're more protected when you're doing the arbitrage,
right?
And especially if you're already in a long, because it's already trending that way, it just helped you.
That's right. Absolutely. That's a good example. That's a really good example. Yeah, I remember, I don't think it was too long ago, but out of nowhere, the market went up I wish I would remember those dates, but the market moved dramatically in the overnight session. It was up or down 100 points, but the spread barely moved. And
yeah, I've seen that multiple times. Maybe we should just make notations and keep them for reference where, look, you have this 200-point move on the Dow and you don't even feel it.
Right. Good morning, Isham.
He's on mobile now, so he's audio only. So
gotcha.
Zoom's pretty cool. He says we need to pay attention to the volatility arbitrage spread number when going down the bell curve. Well, that's the money. That's, we always say the VA volatility arbitrage oscillator, or just the ARB oscillator, is the money indicator. So, and when we're looking at the spreadsheet, yeah, that's looking at it from a daily basis. So if you were in the trade long term, that's how much you made or lost in that day, whether you were long or short. So yeah, that is a measurement of the profit or loss. So it's very important to pay attention to that. And if you're looking at it on a daily basis, we also look at that because it can only go so long. Nothing lasts forever. But once we get 6 or 7 days, it's always due to turn around the other way, which is the nature of this relationship. So yeah, it's important to keep an eye on that number.
I think we also don't really emphasize trading when we're going down the bell curve like we do going up the bell curve. So I mean, it seems more. I think we put more emphasis on going up the bell curve, but there's profits to be made on going down the bell curve too, because down the bell curve is typically some pretty decent moves.
Mm-hmm.
The problem is you're not quite sure. We know when it's going up the bell curve because we have a nice steady upward movement from a 2 to a 3 to 5 or whatever it is. Going down the bell curve is a little trickier because you just don't know if we're going to get a hard landing or we've actually hit a peak or not. Like that 8 right there, hey, it could have gone to 12. So we're not quite sure if we're going on a bell curve. Although it went to 8 to 6, yeah, it's going down the bell curve at that point. But I've also seen it go from 8.6 to 8 again.
Right.
So the more conservative approach is trading up the bell curve. Those are the highest probability trades that we have. Going down the bell curve is a little bit trickier. I mean, it's still, hey, if you want to go for it, especially with the micros and micro E-minis. It's not a bad trade to make at all.
And it doesn't overrule anything. It's just an indicator of what's going on. So there's no decisions that are made based on what this number is, Keith. That's just telling us what the amount of the change was for that day when we're looking at the spreadsheet or when you're looking at the chart, whatever time frame you're on. That's the level of the change there. So when I hover over this and I see a 0.15 right here on this bar, that's a 0.15 move to the downside. So when I'm short, it's like one of my private clients was this morning. He took this short for 5 minutes and he made $115, I think he said, in this 5 minutes.
That's a big move in 5 minutes. 5 minutes. Wow.
Which is why he grabbed an exit, because he knew that's a very extended bar.
Yeah.
Looking at the 1 minute, so 1, 2, 3, 4, 5. Then he had this move and he exited. So that's how we just use that, whether it's on the spreadsheet or the charts. It's just a measure of profit or loss. It's not an indicator of long or short. Today, the TSA was down around the open, based on the 1 minute, was leading up, and down on the trade based on the spreadsheet. But we knew it was going to be very volatile. But it does look like we have a potential of getting to another 2% peak, the rate this is going.
Yeah, in the chat, in the PC chat room, I posted a message saying that it's going to be volatile around the open, and we did get that 1.5 down or 0.15 down, and then it looks like another 1.5 up. What's the next bar up there?
Yeah, that's a 1.3, almost a 1.4.
1.3, almost 1.4. So, and then eventually it's going to settle into a down moves for today. You know, we're at the spreadsheet again is minus 1%, I think, in the fifth, and I think it's pushing up towards 2%. So that's why I don't trust this up move too much. We'll see. I mean, maybe this is because the UD percent is only at minus 7%, so it doesn't look like a peak, even though the bell curve is at 8. I think the fifth is pushing towards a 2%, but we'll see. I mean, you know, we almost hit the 2% a couple days ago on the 2nd of July. Didn't quite make it. Came back down. Now we got a fat tail. The fat tail is, you know, they work out pretty good. We'll see, though. I mean, if we end up with a positive spread today, that means the bell curve is going to probably go down to like a 5 or a 6. Now we're going back down the bell curve again.
Yep. The one thing I did notice too, that not that it's going to happen today or not, but we did hit this 339 or 3.399, so we're below a 3.4 on the ratio.
Oh yeah.
So I updated the correlation tab, or not the correlation tab, excuse me, the trend tab. And we see that 3.4 level is very famous for making turns. So yeah, I think we're going to get a peak and then we're going to go back up.
Yeah. Okay. Yeah. That's something I haven't looked at in a while. We're back down to that support level on the ratio. Absolutely. It looks like it's held. I mean, consistently held.
Yeah. This dropped a little bit below there.
Yeah.
3.387. But yeah, whenever it hits there, it doesn't stay very long.
Yep. All right. Yeah. That's definitely something to watch for. Key says the 4 hour bar was continuation. Yeah, so far it is. Yeah, absolutely.
Let's see, where's my other?
Mike says the SS and the H4 Asian market were in conflict. True. Yeah. So the spreadsheet was pointing down, and the H4 was up. Absolutely. The rut's kind of taken a.
Turn off my stuff a little. Yeah, we need an intratrader script for the rut. I know that one's trickier.
Yeah.
Well, there's a down signal on the YM. I'm just watching things. People don't take shorts.
We're still above that 15-minute, 5-minute bar, though. 8%. So, anybody here listen to Powell yesterday talk? You probably.
I didn't personally. I was watching some stuff on a plane since I was flying.
Yeah, very interesting. Very interesting. Actually, there was a senator from Massachusetts. I don't know how to pronounce her first name. Presley is the last name. She ended up grilling the Fed chief on faster payments task force that was created like 4 or 5 years ago. They completed their work last year, and they sent the recommendations off to the president. Ripple's presentation for XRP and for the XRP ledger was like their number one pick, I guess, for faster payments in the United States. The Fed chief responded to her questions from the senator by saying, basically, there's some discussion about whether or not the Fed should even be involved in consumer-to-consumer payments. for faster payments because they're really just a banking entity. So they deal with banks to banks, not consumers to banks and consumers to consumers. So that was kind of interesting that he said that, which means that it may not be. I mean, the Federal Reserve may not have anything to do with that at all, although they're the ones that convene the Faster Payments Task Force. So I'm not sure what the purpose of that was, if they're not going to have anything to do with it. But she was like right on point. I mean, her questions were just absolutely amazing. I don't know I'm not sure if you can actually hear this. I can play it. It's only like 2 minutes long if you guys want to hear it.
Should work, yeah. Give it a run.
All right, let me see if I'll turn my microphone around here.
Yeah, sometimes that works, sometimes it doesn't. We'll see.
All right. You tell me if you can hear this or not.
Okay.
Thank you, Madam Chairman, and thank you, Chairman Powell.
Yes.
You can hear it okay?
Yes.
Okay, great.
Committee today. The Federal Reserve can do more to support the needs of hardworking American families. As it stands, working families wait days at a time just to have their checks cleared. And when you are living paycheck to paycheck and rent is due the first of the month, there can be no room for error. As a central bank in America, the Federal Reserve has a responsibility to speed up the process of clearing payments. I want to bring up a report that was issued 2 years ago, the Faster Payments Task Force. In that report, the task force called for a payment system in the United States that is faster, ubiquitous, broadly inclusive, safe, highly secure, and efficient by 2020. Mr. Chairman, 2020 is less than 6 months away. Yes or no? Will we have a faster payment system by then?
No, we're working on it, but we're not going to be done by 2020, I would say. But we're getting there.
The task force also concluded that broad access to settlement services will help level the playing field and enhance competition among providers of faster payment services. Yes or no, do you agree that this is an issue of accessibility and equality?
I do agree with that. That's one of our principal motivating factors.
And so would the Fed like to see a world where all Americans have access to faster, secure payments?
Yes, we would. That's why we've been working on, you mentioned that report. This is a project that's been going on for 5 years.
Right. If you can instantly clear payments between the accounts of commercial banks held within the Fed, why not consumers writ large? What's the delay?
Well, it's not it's a service that hasn't existed. It's existed for banks. Immediately available funds existed for banks. We really, we don't have plenary authority over the payment system as some other central banks do, but we convened a group of people and institutions maybe 5, 6 years ago. And we said, let's work toward this. And so.
Yeah, so that was the first part. The second part was just as interesting. I'll play that. It's only a couple of minutes long.
That's the report you saw was I think the last report that we issued, and we're now working to implement some of the recommendations.
Yes, Mr. Chairman, just trying to better understand the delay in the implementations of this report. Have you received any pushback from any businesses, particularly the credit card industry?
You know, I think we're determined to do what we see the right thing as. We're not looking.
Have you received any pushback specifically from the credit card industry?
I have not personally, no. I think that
so a faster
businesses to advocate for their own well-being, though.
Sure. Do you agree that our country's continued lack of a real-time payment system is being exploited by credit card companies like MasterCard and Visa, and also outside of that industry by Facebook to create a digital currency?
I wouldn't want to use those terms. No, I think people operate in the environment that they have. We're trying to create an environment that does have faster payments broadly available, and we think that's a better environment for the reasons you articulated.
Yeah, I mean, I really do see a faster payment system simply as a public good, and the lack of action here creates a real void in the lives of consumers everywhere, and these voids are increasingly being exploited by companies looking to operate as financial institutions without the guardrails. Facebook's Libra is being trotted as a solution to the unbanked. However, I struggle to see how ceding the functions of a central bank to a private company solves an issue of resources. Instead, we should be using pre-existing infrastructure to ensure that all people have the ability to safely and securely and with no cost access and move their money 24/7, 365 days a year. So again, let's not lose sight of the plot. Mr. Chairman, and the plot is the American people. I hope to see your organization become more reflective of the lived experiences and the everyday needs of Americans. Thank you, and I yield back.
So it was kind of interesting that she said specifically that they wanted faster payments at no cost. Well, there is no way to do that through Visa Master. Whoops, I had to turn my microphone around. Okay. So there is no way to create a faster payment in the United States with at no cost. I mean, exchanging XRP is almost at zero cost because it's less than a penny. So that's the only thing I could think of that she was even talking about. But the Federal Reserve chair was he's like, well, you know, we've been working on this for 5 or 6 years and we're not even sure this is part of our duties. It was pretty interesting discussion. I enjoyed that. She was very on target though. She was like, I mean, she didn't come out and say, hey, why don't you guys just use Ripple solution in XRP? But
right.
Yeah, but basically that's what she was saying.
It is good that, you know, you get people who actually know what they're talking about every once in a while.
Yeah, it was amazing actually. She was right on target, man. She was good. She knew what she was talking about. Anyway, so they decided not to raise interest rates. There's a possibility of a 0.25% increase. Or I'm sorry, a 0.25% cut.
Yep.
And you know what? We've got maximum. I mean, we've got unemployment rates at the lowest in 30 years. We've got a high stock market at all-time highs, and they want to cut rates. That is not typical. I mean, going.
How else are you going to get to 30,000?
Yeah, I guess so. So they get to 30,000 so they can just dump it later, you know.
Nope.
But I don't know. All through the 80s, especially during the 80s, in 82, they started cutting rates and the market started taking off. That was really the beginning of the current bull market, in my estimation. And then, of course, we had the financial crisis where they had to lower rates, you know, in order to get the market back up. But now we're at all-time highs. This does not make any sense to me that they would be cutting rates. And the only thing I can think of is that the information that they're getting about potential global recession is real, and they want to try to head that off before it comes to the United States. But it still doesn't make any sense at all. It really doesn't.
And I should probably really caveat with people that are listening to recordings that I am very sarcastic at times, so I apologize if it come across the wrong way.
I get your sarcasm. Why doesn't everybody?
Everyone should, right?
Everyone should, yes. But anyway, any questions on our setups, guys? Today we've, I think we got it looks like the market's starting to cut back a little bit here, but not much. Not much.
Yeah, it's thinking about dropping. The YM's still thinking about going up though, so. We'll see how long this lasts today. I got a feeling it's not going up anymore.
No, it's going up. Yeah, spread's still moving higher.
Yeah, the spread's definitely going to do that. Just the whole market itself, I think, is going to. We'll see. When I was landing in the plane, it says NASDAQ closing at record highs. I'm like, yeah.
Yeah, that's exactly what I mean. I don't know how many individual investors there are actually in the market anymore, besides traders like us. People who just put their money directly into the market, like individual stocks, and then hold them for years. I think I haven't seen any numbers lately, but I think I'm guessing that 98% are just putting into mutual funds and they're investing through their 401ks and stuff like that.
Right, with all these quote unquote packages that the different firms have put together. I absolutely agree with you there. That's very less people. You might get a 0.5% of people that actually pick stocks now or attempt to because they think they're going to be the next Warren Buffett or they follow something he's doing or some talking heads doing. But yeah, I'd say the majority are doing some type of fund thing.
Exactly. And so it makes you think, well, I mean, back in the 80s, the 70s, 80s, and even part of the 90s, I think individual investors made up like 60, 70% of the market. And now I think it's barely 5% or less. And so who's actually, pushing the market around? It's all the institutional investors and all of these funds that are just basically putting money to work that they're getting in. And people, hey, they send, Fidelity a check and say, okay, put it in your fund, this fund or that fund.
Right, and people are happy to keep their 2 or 3% after all the fees and everything else, and they think they're good.
Yep. And so the market is really controlled by these large institutions now. And so that's why you have to use smarter tools in order to really succeed as an individual investor or trader today. You can't do the same thing. Like most of the technical analysis books that were written over the last 30 years, 40 years or longer were really geared towards a market in which the individual investor was making the decisions on their stock portfolio. Today, that's not the case. You've got institutional money managers that are picking the portfolios, and and individual investors are basically handing them the money and saying, here, invest it for me. One of the things that we talked about before is the number of people who are retiring on a daily basis. There's like, we're talking about 10,000 people a day retiring, and that possibly is one reason why the market will decline, is because you've got all these people retiring, and eventually they're going to want to take their money out. But I did some research on employment, both in the United States and the number of retirees. So at current levels, this is from May of 2009. This is directly from the Social Security Administration. All beneficiaries of Social Security benefits, okay, those age 65 and older right now, is 48,666,000. The workforce, the number of full-time people in the workforce, 16 years and older, we probably should go to like 20 years and older, I would imagine, is 127,095,000. So you've got 48 million, which is about a little less than 50% of the total workforce retired.
Yeah. And think about, on top of that, you're saying, people may need their money because they're retiring. That's also 10,000 potential, or not potential, but actually 10,000 people a day that are no longer contributing to a 401k. That's money going in.
Exactly. So I think when that pushes to 50% or higher, it's something I'm going to keep an eye on. I think that's probably going to be something that will turn. It's going to be the tipping point for the market. That's interesting. Yeah, 48, age 65. These are type of beneficiaries age 65 and older. 48,666,000 collecting Social Security benefits, retirement age. So, with 127 million workforce, there's once that Social Security benefits hit 60,000, now we're close to that 50% mark, and I don't have previous months. I'm going to subscribe to their updates on the Social Security to get that. But when we start seeing that up around 60 million retirees age 65 and older, I think that's going to be a fundamental shift in the markets. Something to keep an eye on, anyway.
Definitely. And Sean wants to know if using the spread, does that eliminate futures manipulation?
That's the idea. That's exactly the idea.
Because they typically go up together, whether they're manipulating 1 or 2 or 4, they do rise together. That's why the hedge is there. That's built into it. Absolutely.
Yeah, that's the entire idea. So if you guys have anything to contribute, hey, if you have an insight, man, we are all ears. We've done, I mean, I've been doing this research for years and years and years, and it's the only thing that I found that is able to eliminate some of that noise. And I mean, the manipulation is rampant. It just, you know, so you went through the specialist system videos yesterday, right, Dan? And you saw the graph that I used of in the kind of the logic behind the manipulation that goes on behind the market. There is right now here's the big picture. Okay, there's still specialists and market makers in the system. The specialists have not gone away. In fact, I showed articles in those videos showing that, in fact, the attraction to large firms, especially Goldman Sachs and others, want to get into the specialist game because they realize how lucrative it is. And so when a lot of these, when Goldman Sachs or JP Morgan or one of these other firms, they own the specialist firms. They're not named Goldman Sachs. They're not named, you know, JP Morgan. They have these specialist names. But what they do is they can decide the opening price of a stock. And they can also decide to trade for their own account. So they're in competition with us when they're trading. They accumulated a massive amount of stock in the 2008-2009 crisis. They just filled their coffers. They just have so much stock. And the only thing that they've been doing since 2008 and 2009 has been distributing those stocks at higher and higher prices. That's all they do. They accumulate and then they distribute. And, it seems to me that at some point, I think they accumulated again in February 2018 after those 4% declines. They must have accumulated a ton of stock again. And they've got to get rid of that now by taking the prices higher. So when does it end? I don't know. As soon as they finish distributing all the stock that they have in their accounts, then they're going to take prices down to start the accumulation process all over again. Mark says, I totally agree with what both are saying. I've believed it for years. So many ETFs and funds coupled to just a few stocks. Yeah, that's true.
Yeah, speaking of the specialist system, if anybody listening or anybody listening to the recording hasn't gone through that yet, it was one of those things that I always said, yeah, I need to get to that. I'm going to listen to that one soon. And, I went through, this is years ago. I went through the high level stuff. I went through everything else. And for some reason, I never got back to that one. So I was traveling. I'm like, hey, I'm going to listen to the specialist stuff. I'm sitting in a hotel. I got nothing to do last night. I finally need to get to this. And I was just blown away again, Dave. I'm like, this is ridiculous. Just to think that there's actually no law that people that are controlling the markets, like you say, they select what price the stock opens. So the specialists, there's people that control certain parts of the New York stock. Like they get, here's your 4, here's your 10, here's your 30, whatever it is. They set the price based on how many they see buy and sell orders coming in and what the trend is going to be, which is ridiculous, and based on what they own. So they also have their accounts, like you say. So they have these multiple accounts that these guys are running, whether it's their personal accounts, their business accounts that they have to do to control the market because it's their job to provide a fair and equal market. Yeah, right. And there's no law that says they can trade their own money at the same time. I think is absolutely ridiculous.
Yeah, conflict of interest is crazy.
Yeah. And just, it's the exact reverse of everything people think. Like you see the rally and you see the drop. Well, it's because it's what they're doing. They set a rally because they need to sell. So they rally it up and people say, oh, let's buy it. Yeah, you buy it up because I got to sell my stock. I got to distribute it.
It's exactly right.
And now I'm done distributing, so now I'm gonna drop it because I need to buy more. So now you're gonna sell it because you see price going down. Blew my mind. Anybody that hasn't listened to that, listen to it immediately.
Yeah, you guys need to, yeah. If you haven't listened to it in a while, it's probably a good time to review. Or if you haven't listened to it at all, it's going to open your eyes, that's for sure. And not only that, but during the 1960s, Congress actually investigated the specialist system. And the specialists came out right out and said it in their open testimony. Oh yeah, we can if we need to, we can raise the price of the stock or we can lower the price of the stock, whatever we feel is appropriate for a fair and orderly market. So basically, they can do whatever they want.
Yeah, just amazing. Yeah, between that and I'm reading the reminiscence of the stock operator on the plane, I'm like,
oh, you got that too?
Yep.
Awesome. Yeah, he's. How far have you gotten?
I'm just maybe 3 chapters in 4.
Okay, it's interesting, isn't it?
I love it. Yeah, it's a great story so far. I can just picture this guy doing it.
Yeah, it's pretty fun. I remember when I first got started in investing after a few years, that was like the first book I read, and it just fired my imagination. It's like, wow, crazy.
All right. What are we doing lately?
Mark says, I recommend listening to a podcast on macrovoices.com, a segment on July 3rd with Danielle DiMartino Booth about the global recession and market manipulation. Very insightful, exactly like sugar high and then deflated. Yeah, it's, I think these trends can probably end up lasting longer than you think they can. And this one certainly has since 2008. The end of the rise will probably come as a shock to most people. It will come suddenly. It will come very quickly. And I think it is going to be a shock. It's going to be one of the shock events. And especially after 2008, I don't know how many people I've heard talking heads on TV or just general conversations with people that I know that, oh no, 2008, 50% cut in stock prices could never happen again. Even Janet Yellen said that in her, I think one of her last speeches before she left as the Fed governor. She said, it will never happen again. Yeah.
One thing I've learned is you never deal in absolutes. Never say never.
I know. Absolutely. Yeah, that's true. I was going to say absolutely, but I don't want to say absolutely.
I caught myself the other day doing it. I had to correct myself. I'm like, I shouldn't even say this, but.
Yeah. Yeah, never say never because, hey, it could happen again.
Anything is possible.
David L says, hey guys, is the ESRTY arbitrage on a 1-to-1?
No.
No. The ESRTY, I haven't done the calculation on those two contracts in a long time. The MES, M2K on the micros is not 1-to-1. It's 2-to-1, I believe.
Yeah, that's the first thing I went through was the micros, absolutely. So if you're starting there, David, I would say then you're 2-to-1. So 2 RTYs to 1, or excuse me, 2 M2Ks to 1 MES, as Dave said. Start there, and if you get up to ESRTY, you'll probably figure it out before you get there.
Yeah, right at the top of the spreadsheet on the YMNQ is the calculations for the contract values, the notional values of each of the contracts, the ES, RTY, YM, and NQ. Just check and update that because that hasn't been updated since 2017. Check to see if those are still current. So if the ES notional contract value is like 140,000 or 150,000 and the RTY is only 80, you need to do a 2-to-1 on those two.
I'll update those at the end of the week too, because it is at the top of the sheet. So yeah, I'll check the values and I'll throw that update on the lately or on the most recent update. You bet.
Awesome. Perfect. Yeah, David, you just follow this spreadsheet all the way up to the top and then go to the right, the spreadsheet, and they're still there.
Any videos on the intraday script? I think there's a couple. I don't know how much we used. I'm trying to remember. Just when they first came out a little bit, I think, didn't you do a couple for market timer guys? And we used one in the day that you put up there.
Yeah, if you go to the YouTube channel for Strong Market, I do believe they have a couple of videos up there. Not many though.
So I'll make a note whenever I get a chance in all my spare time if I can get some of those. So appreciate the feedback.
The NQ's gone negative. Interesting.
There it goes. Yep. See. Yeah. All four. Oh, just YM is left now. Wait for it.
Yeah.
Mark likes your comments, by the way, in case you missed that comment. So.
Oh yeah. Oh, thank you, Mark.
On the market timer, the LT stuff, and the perspective. So.
Yeah, I highly recommend though that you go into those specialist videos and watch those if you haven't seen them in a while. It was probably the most fun I had doing videos.
Speaking of that one, Dave, you left a huge cliffhanger because you said there's in the next video, and there's no video 4.
Really?
Really?
I'll answer that in the trading room.
I thought that was funny. So I don't know if there's a video hiding somewhere in the coffers. Let me know.
I don't think so. I don't even remember that. What was the cliffhanger?
Well, it was just saying, I think you were working on, because that was the old XTR spreadsheet that evolved into market timer, I'm assuming.
Yes. Yeah, I never released the spreadsheet when it was at Tradingology. I only took screenshots of it because I wasn't quite sure what I was going to do with it. And then when I started working with the quantitative analysts from a hedge fund back in the summer of 2017, they said, this is like completely different. So let's work on that. And then Strong Market licensed it. So
yeah, so the cliffhanger was that you were working on the XTR spreadsheet and you're like, okay, in the next video, what we're going to do is we're going to pretend like, we don't know what's going to happen. We're going to block it out. We're going to see how we actually use this. Then it was, oh, you're funny.
Yeah, that completely turned into the next iteration of that spreadsheet, actually several iterations.
So you guys that go back and watch it, don't worry, there is no video 4. It's just changed. And so you're going to see where market timer came from and some of the birth of it, where just the information that how it was changed over.
Yeah, I basically privately traded the market timer spreadsheet from the end of that video until the next year before the quantitative analyst took it over. And I made like 18, 20 million. No, I'm just kidding. That's why I never did the 4th video.
There you go. Sham, he mentions here entries and exits with Volarm 2.0. Can you cover it? I think you've done more work than I've done on it, Sham.
Yeah, especially maybe we should have a Sham on. You want to come on and explain those?
I think you're going to be exactly, because I have not used them for day trading. Completely honest, Sham, I haven't had time to get down to that level. I purely look at it more from a swing trading perspective on how's this looking for a multi-day setup. So I have not done as much work as you have, looking at it on like a 1 or a 5 minute chart and combining it with the Renko cloud and all that stuff. So if you ever want to talk about it, you let us know, because I think you know more than I do right now on it.
But I mean, yeah, we can put it up there maybe next week. We can kind of take a look at different things, but give Dan a few more days to play with it.
It is available to all of our masterclass candidates, Mike. So it's in that series. I uploaded it a couple days ago or yesterday, whatever day it was. You're gonna see it's in the post for EA Masterclass 13.
Okay, guys, we got about 10 minutes left. Any questions? Feel free to put them in. If you want me to go on another rant, just say rant. Otherwise, we're going to enjoy a nice sunny day here in the Northeast. What time do you fly out?
I'm taking off out of here at 5 o'clock.
Okay. Did you go out to dinner last night, or you just kind of chill in the hotel room and order room service?
I think I'm in the shady part of town, so I didn't feel like walking 15 minutes, so I stayed close by.
Yeah, and it does shut down. I for a large city like that, I really anticipated that it'd have a vibrant downtown after dark, but nothing.
Yeah, I'm on the other side of the highway, but I'm like a 15-minute walk to downtown. It's really funny because the Cirque du Soleil is set up right across the street from my hotel, so it was booming for that. So I watch people come and go. I'm like, maybe I can get into the Cirque for free.
Yeah.
Those are fun shows. If anyone hasn't seen them, highly recommend them.
Yeah, they're great. In fact, we saw when my son was in college there, we went to one. Yeah, it was great. It's awesome.
If you don't want to be awestruck, go to one of those. Those people are amazing.
Yeah, they're crazy. All right, I see a lot of chats coming in. They want me to go on a rant.
Rant.
One thing I will say, I forgot to mention this before we go. Yesterday, we talked about the YMES pair for quite a while, but it's always been, hey, this is slow. It's kind of like training wheels for the volatility arbitrage trade, but there's still money there. And as far as I'm concerned, I think it's sometimes easier to predict a little bit because it is such a tight spread between the YM and the ES. So I was kind of busy yesterday. I didn't do the vol arb yesterday for the conflicts that were there, and I just kind of pulled up the YMES, and so I said, well, let me take a look at it and see what's going on. And I took a short position on it sometime in the morning, and by mid-afternoon I was up $200. I said, well, that's free money. He says, so I mean, don't, just because we focus in on the YMNQ, don't discount the YMES either, because when you're busy or you have, you have no other trades to be able to do, or you can't get into a trade because you're super busy or whatever, think about the YMES, because that thing does tend to trend very, very well. You're not going to get the big money that you do on YMNQ, but it's something that you can put on and kind of let go for a while, and I think it's a great trade. So don't dismiss it just because it's a little bit slow moving. You may have to be in it for a day or two. Yesterday, it moved really nicely down, and I was only in it for, I think, a couple hours, maybe 3-4 hours, and I closed it out with a $200 profit. Nice. on the regular YMES contracts.
Gotcha. Very nice.
Yeah.
That will be added to the download section as well this week, guys. So I'll put that up there tomorrow afternoon or Friday or something before I head out on my second camping trip for the weekend. Or for the year, excuse me. I can't do more than one in a weekend. It's camping season for Dan and his family, so we're doing weekend number 2. No mines this time, though.
Oh, nice. No mines? Okay. Huh?
Not this time.
Swing trade for vol arb 2.0. Check the dominance on the H4 chart, end of day, and trade in that direction. Is that the basics of what you do? No. I mean, for an overnight trade, you mean Asham? No, I wouldn't take. I mean, if I'm doing maybe the micros, maybe, but I don't do that. No, I typically don't do that. No. Here's I mean, here's the way that I've looked at the YME or the YMNQ using the ARB crossovers. Is that if it's positive, then we're probably going to stay positive. If it's negative, the chances are we're going to stay negative. And like if you look at the, let me just pull up my chart. I'll pick up my 4 hour here. I mean, if you look at it right now, it's negative. So the H4 on the dominant side is minus 15.49. And so, and it's been negative now since about June 13th. And it stayed negative. And so it had a very long positive trend. Now it's gone negative, but it's still negative. And even though it kind of trades upward, but it's still on the negative side of that upward trend. And so I would stick to, a negative bias to the H4 chart using the ARB crossover until it turns positive. And then I'd be more positive about the spread. So I wouldn't use it on an overnight though. No.
So we'll see the positive happen after we got this 3.4 hit. So it wouldn't be surprise me if it was a couple of days and we started running positive, Sean, but we'll see what happens.
Yeah. Have you got those loaded up on your laptop there or no?
The 2.0, I do not.
Okay. Yeah, we can take a look at it next week though. I'll show you what I mean. Where can we get the YMES spreadsheet? That is, I sent it to Dan updated this morning, so he should have it up on the site probably tomorrow.
Yeah, I'll put it up with my Friday updates, new rug. So look for it Friday after close. And there was one person that emailed me. I don't know if they're listening or if they're on right now. I forget who it was, but if you get any problems, like updating, like I had one person put in the incorrect dates or whatnot, and some of the stuff wasn't working. So if there's ever a problem, just go up to the last weeks and grab a new one, and then update the last couple of days, guys. Is what some advice I can give you there. I can't really dig into what may have happened to your version if you make some changes or click on something and accidentally goof up the formula. So it's just quicker to download another copy if you ever see a problem.
Yeah, absolutely. And also you can get, most of the time, Yahoo Finance is reliable. We found lately that it's not, but occasionally, most of the time it is. And you can
holiday glitch. Yep.
Yeah, you can download the data from there to update the spreadsheet, or just, or Dan updates it regularly, so you just grab it from there. But typing, make sure you enter the numbers accurately, because it's going to throw everything off.
Yeah, I don't type anything. I cut and paste the numbers. If anybody's
that's a good idea. Yeah.
Take the human error as much as possible out of it.
Absolutely.
Good job, everybody.
Awesome. All right, guys. Well, thanks so much for joining us again today. We appreciate it. Enjoy your time in Connecticut, Dan.
Absolutely.
I know it's super exciting there.
Hey, I knocked one more off my list, so
it's too much to take.
I got another state that I can say I haven't been to. Now I've been here.
Yeah, well, try to make it to upstate New York sometime, and I'd love to catch up with you and see you in person for a change.
Oh, absolutely. We need to see Niagara, so that's on our list too.
Oh, good. Well, Niagara is pretty awesome. Actually, when our kids were small, we go out to Niagara Falls. They have a beautiful park there. And the best time to go is July 4th, because the fireworks are amazing. So if you the fireworks are all over the falls, and there's a large state park there that you can kind of hang out and watch them, and it's just a lot of fun. You'll enjoy it.
Sounds like a master plan for 2020 in the books.
Yeah, definitely. The other times of the year, yeah, it's okay. I mean, there's lots of stuff to see. There's the boat that goes out into the falls, and it's it's crazy. They give you these parkas that you have to wear, these waterproof parkas, and because the spray from the falls is just all over the place. You get super wet. Don't wear them. And it's very rocky. The boat can be really rocky sometimes. So you better, if you Dramamine, you better take some with you. But it's fun. It's still fun. But July 4th was the best. I think that's the best time to go.
Nice.
All right, guys, you're very welcome. Mike, Mark, and Jörg, Have a great day, Asham. All you guys have a great weekend, and we'll see you again next week.
Yep, sounds good, guys. This recording will be up tomorrow since I got to take me a little time to render since I'm on the road. So look for the update tomorrow, and have a great weekend.
See you, Dan.
See you guys.